Hello, everybody. Trust your Thanksgiving weekend is going well. I want to visit with you about larger time frames. I posted a video a few days ago about micro trading. That's a 15-second chart. And you look at the highs and the lows. Like, say we're just seeing this area right here. These are the lows. They're relatively equal. This is where stops will be. So the market will most likely come down and take those out and then move up higher. So we didn't take it. We didn't take it here. We took it. So then we move over and we go up higher and we take out the highs. It didn't quite make it to the high, but that would be a nice little trade. That's 9 points, $20 a point, $180 on one NQ. So that's the gist of micro scalping. You can do the same thing on a higher time frame. If you come over to a daily chart, you can see areas of inefficiencies, like anywhere that the candles don't touch one another, or if they overlap. This is like a gap, and the market will trade back down into those. So if you've got deep pockets, you can trade a daily chart like that. My pockets are not that deep, but if you look, we made a low here, we made a low here, we made a high up here, relative equal highs now 3 times. And as the market is moving, it comes down, like it made that low, went up, made that high, came down, took out that low, went up, relative equal high, came down and took out that low. This is all on a daily. And then we had Thanksgiving, and then the Friday after Thanksgiving, it made it up to these highs, but it didn't go through them. So we've taken a stab lower 3 times, taken out liquidity down here. Just on that hypothesis, we can think, well, if we can get in on a trade down in this area, this is our next target. I would say the green line right here would be our next target. And that would be relative equal highs on the daily. So you'd want to mark that out. I can't see if I even spelled any of that right. Relative. Maybe. There we go. Okay, so we got our relative equal highs on the daily, and then this would be the high for last week. Could also be a target. Now, I don't have deep enough pockets to trade that. If I go down to a 15-second chart, I can see those levels. You could trade them. But all the undulations, especially if you're a new trader, can be a little bit too much. Stresses you out a little bit to see things move that quick, and you think, oh my gosh, I'm up that much money, and then something like this happens and you're down money. But you can definitely see lows being created, highs being created, highs being taken, lows being taken. That's the concept. Now, what I did Wednesday through Friday with about a $2,400 profit on those 3 days combined was I worked all that same concept, but I did it on a 15-minute chart. Okay. So I guess it doesn't really matter. This is the regular trading session, regular trading hours. This day was a little bit more difficult, but if you put in the electronic with it, it's not quite as bad. Okay, so this is our electronic. Over here you see a low. We went up, made a high. We came down, we took out the low, and then we traded on back up for the rest of the day. This would have been a really nice little trade to get involved in. And I actually did have my order to place a long right here when it took that. But I was seeing these inefficiencies and thinking, well, maybe we're going to go a little bit lower down. I think I actually had it right here at 808.50. That's where I had my order entry. And then I moved it down to these two relative equal lows right here, thinking if we got that close to 800, we're probably going to go ahead and take out 800. But we didn't. But I'd moved it down here. It went to 805. And then, so this was the liquidity it was searching for, possibly even this one, because it wicked down into that. But that's it. You can see it wicked down into that inefficiency right here, that gap in the market. This is actually a new day opening gap, and then immediately reversed and went up the remainder of the day. So I didn't catch that trade, but I did catch the one on the way down. When we did not make a new high here, I went ahead and took a short, and I caught this one down. I think I took my profit right around here, and it was approximately $400 or $500, something like that. So I did make a little bit of a profit there. And I think I took an overnight that got me a little bit of profit here as well. So trading these larger time frames is much less stressful for me, because like when I come into the market, I'm looking for these straight lines or these lone pins on a 15-second chart, 15-minute chart. This pin bar right here, this wick, it's the lowest low for a while. That's going to be a target at some point. So there's going to be people that trade these larger time frames that are going to put stop losses here for sell orders if they're long, or buy orders. The people that do breakout trading, once it goes through it, maybe they're going to have a buy order to place an order when it breaks to get down here to the 900 or maybe even 780 level. They're going to try to capitalize on that and take out this one. So there's going to be orders here, most likely. Definitely, there's definitely going to be orders there. Also, there's going to be orders up here, these relative equal highs. When we break a high like that, especially when there's been several of them hit, there's a likelihood, pretty high likelihood, that we're going to pull back at least a little ways. And this one, in this case, it could go up here, and that's from 27 up to 61. That's too big for my stop loss. So in that situation, I would want to do micros if I took the trade here. If I took it here, I would do just one big contract. But we do have this level also lingering up here. So depending on where it opens money, if this was just a regular day and I'm looking at it, I would think I'm going to put a sell order here to sell short. I would put in probably a $400 stop loss on this. If it keeps going, I'd be watching it real close. And if it got me in the hole more than $200, I'd kill it. And then a take profit, I would be aiming for a recent swing low, either here or here. This was last week's opening gap. I might be aiming for the center point of it, because as you can see, the market likes to trade to those center points. See how many times it went there and stopped? These are the 15-minute charts. Here it came and stopped, came down and stopped. All these little wicks coming and just traded through it just a little bit, stopped. This one went all the way to the top, came back down, right up to the middle of it again. So I would probably think that we're going to take out that high and then trade back down to the middle of this opening gap, or possibly some of this low-hanging fruit here would be just an easier target, because that is relative equal lows right there. You see how this one came down a little further than that one? This one is, when you see that, this one's lower than that one. That is a premium array. There's going to be some stops underneath there. Algorithm will refer to it. And also this, because of the new week opening gap, would also be a target. So I would just watch there. But I would just put in a sell order there. You're not in the market. There's no stress. If it hits your order and fills it and reverses like I would expect, you make money. If you don't, if it doesn't fill you, you don't lose a thing. If you're incorrect, you're only going to lose a little bit of money. That's controlling your losses. If it doesn't go your way, don't get back in another trade right away. Just reassess. Okay. So we've blown past this high. Now where do we go? Well, we got this one. So we could put in another sell order here. And maybe keep your, if at $200, that's a 10-point move. It could blow past your 10 points and still come back down. 20-point move is $400. I would just be watching it, watching the speed at which it moves through there, and I might take it off if it's looking like it's aiming for this level, which is highly likely. Or I might just wait and put more order there. But I think I'd probably try to take a stab at it here, and I would also, if that one fails, try another one here. If that one fails, I'm done for the day. I'll reassess it later, maybe in the afternoon session or possibly in Asia session, look to see where the draws might be. But by placing these limit orders, you're removing you're kind of taking your own psychology out of it. At this point, you've assessed the market, you've gotten your hypothesis for the day. When it takes these highs, we're going to see a retrace down to here. So that's your order, that's your plan. And you don't take any trades other than that. If it doesn't take those highs and comes back down to here, maybe we aim at these lows. We don't get in the middle expecting it to take those lows. We put our order down here below this low with an expectation that we come back to the middle. Doing that for 3 days earned me $2,400 in this practice account. Doing it the other way, where I get involved here, expecting it to go to the top, one day will cost me $900. You can see here, this day I did it the old way, where I get involved in the middle, trying to see if it takes the low. On these, I put orders at the low or the high for a reversal trade, and you can see it was a much better profit ratio than doing it the other way. So I encourage you, I don't know if I can even do it here, but I'll try. You do a limit sell at the top. See, it won't put it in, but that would have placed an order right here where this green line is. So when the price takes that green line, it's going to fill your order. Your stop loss will be up here 20 points away. And then your take profit would be down here at least 20 points away. I'd do a 400, 800, and then adjust it according to where my liquidity draw is likely to be. I might be able to get one to place over here. Let's see. Can't even find the candles. There they are. Okay. So on a 15-minute chart, this would be our high right there. I'll see if it'll let me place one over here so you can at least see what I'm talking about. Okay, so yeah. So there would be our sell. When the price takes that level, it's going to sell one short, and the stop loss would be up here. The numbers aren't going to 20 points away. So that's at 26. My stop loss would be at 46. And it doesn't have to be a static stop loss. And then my take profit would be down here at a recent swing low. I'd probably go with those double bottoms. I really like the way it's been bouncing off of that new week opening gap middle, so I might even go all the way down to there. This is on 1 micro NQ, I do believe. Yeah, it is a micro. So the dollar amounts would be times 10. That's pretty good. $400 risk, $2,000 profit if it came back down to there. And the same is true on the other side. Our low is here. That's a target. This is a target. Just depending on how it's doing you could do this at night. You could do it when you go to bed at night. When that level gets taken, You say, okay, that's the low. When that level gets taken, I'm going to, that's $1,000 stop loss. So we can't have that. No more than 400. And then take profit. Maybe we trade up to the middle of the range there. So you would do something like that. And you can do that before you go to bed. It's effective. It takes you the equation, because if you're like me, you sit there and you watch that chart long enough, you're seeing trades set up all the time. And you end up making some profit maybe, but then you end up losing it by clicking too many times. So I've kind of had to take my own self out of the equation. I'm pretty good at reading these levels and understanding that when it gets here, it's most likely going to go back up. And when it hits the top, it's most likely going to come back down, because that's what the market does 70% of the time. It ranges. So you can use that to your advantage by only placing limit orders at the highs and lows. If they work out, fine. If they don't work out, that's fine too. You have a plan. Your emotion has been removed from the plan. Once that order fills, you don't do anything. You walk away, close your computer, never look at it again until, let's say, an hour, 2 hours. You can come in and take a peek at it. Well, it's not quite to my profit yet. Maybe you take a little bit of the risk away. I did that on one of those days. Let's see if I can find that lousy wick that came down and got me. It was this one right here. Okay, so I'd gotten in a trade. When it took this low, I had an order placed to go long right there at that low. I think, no, that's too far away. I had it right here at this one to go long when it took this low. It took it. It started going up. Right around here, I was up $500. And I was like, well, I need to move I don't want to lose any money, so I'll cut that in half to where I'll make at least $250. And that wick right there took out my stop. That little wick right there took out my stop. And then it rallied up to where I had my take profit right in the middle of the new week opening gap, which was an $1,100 profit. So by moving my stop up that close, I ended up losing $800 in extra profit there. So by just setting it, closing your computer, and walking away, you're going to increase your profits. You may lose some more trades, but you're going to increase your profits if you're reading the market well by removing yourself from the equation. It's difficult to see yourself up $500-$600 and then all of a sudden you're only up $100, or maybe you're down $100, but that trade has not been invalidated yet. It could still go and hit your target. It's difficult to watch that, so don't watch it. Get away from it. I think your profits will increase. Larger time frame, 15-minute time frame, you can see these levels real nice. If you go to a smaller time frame, you remove all these levels off of your chart, it's much harder to see. You can still see highs and lows, but it's much harder to see. So trade off of a bigger time frame, place your orders. I'm willing to get in a trade here short. I'm willing to get in a trade here long, or here I'm willing to get in a trade long. And that's it. Those are the only two places that you're willing to take a trade. I promise you, if you do that, your win rate's going to go up. Your profit per trade is going to go up. And then you're only taking 2 trades, 3 trades a day. If you're doing that micro trading like my last video, you might be taking 20, 30 trades a day. And you might I've done that, and I've sat there all day and I'm up $100, up $200, $300, $400, $500. And then I get in the losing side and I'm down. And then at the end of the day, maybe I'm only up $100, and I've sat there all day long stressing myself out to the max for $100. And with this, it's not stressful. I can set it, go to the grocery store, go clean my house, do my laundry, whatever. don't even have to worry about it. It's either going to work out or it's not. And that has really changed my profitability, and it has really changed my stress level. Trading is much more enjoyable when you're profitable and you're not stressed out. I love each and every one of you. If you have any questions, put them in the comments. If you know me already, you can holler at me, give me a call. I'll be glad to help you out. I hope everybody has a good Thanksgiving.